interest rates are over 6%. And if you're looking at a conventional loan, well above 6%. Why? It's all to do with inflation. Now, inflation, all it is that your money is worth less over time. A lender lending money over an extended period of time is going to be very concerned about inflation, because if they're getting interest back and it's not above inflation, then they're actually losing value because they can't buy the same amount of goods with that money in return. So, inflation, higher interest rates. Now, what's the Fed doing to combat high inflation? Well, they're increasing, not long-term, but they're increasing short-term interest rates. By increasing the short-term interest rate, it's going to curb demand on people buying things on credit, like credit cards, home equity lines of credit, car loans. It's going to curb that demand because it's more costly to buy the same things. More costly means that there's going to be less people out there buying it. Less dollars competing for those goods brings down the cost of those goods. As costs drop, inflation reports are going to come back that they are lower, and if we have lower inflation reports, the long-term interest rates that have skyrocketed will come back down. When do we think this is going to happen? Well, it all again has to do with inflation. Now, it could be as soon as Q4, but likely we're going into Q3 before we see meaningful inflation decreases. Now, what does this mean to you if you're going to buy a home? Make sure the housing payment is affordable for you, right? If you're buying a home and it works for you for the long term and it's affordable and interest rates drop, you can change your mortgage. You can do what's called a refi and get a lower interest rate, therefore a lower payment. Now, conversely, if interest rates increase, and I'm dead wrong, and interest rates continue to go up, and up, then you bought a home, it's affordable for you, and you have an interest rate that is now lower. So it's a win-win as long as you can buy a home that is affordable for you, that will work for you for the long term. Long term, 5 to 10 years, will typically work just fine in the real estate market and have a healthy gain.